Ladies and gentlemen, Matthews here from FOREX Traders. In today's video, we're going to look at what does it really mean to become a consistently profitable trader. So for that and more, watch the rest of the video. So, in today's media world, a lot of terms are thrown around. Terms like consistent profitability. What does it really mean, and what do you need in order for you to become a consistently profitable trader? All right. So we're going to look at three things, right? Three crucial things that you need in order for you to become a consistently profitable trader. Number one, of course, is the strategy. You need a proven strategy that has been back tested, forward tested, and that strategy has shown that over time it produces a consistently rising equity curve, right? So you do your back testing, do your forward testing, probably use a small account to actually see how your strategy plays out in the long run, and that's extremely important. And it's only when you've actually proven that the strategy works, that's when you can actually go in the live market and to actually go and trade, right? So your strategy, what is it supposed to actually have? Okay, it's supposed to tell you when you're supposed to enter into a particular trade. It's supposed to tell you when you're supposed to exit a particular trade. It's supposed to tell you what pairs do you trade, what is the best session for your strategy to actually play out, right? What is the good market, what's the market condition for your strategy that is optimal for your strategy? So your strategy has to answer all that. All right, so before you can move on and actually start trading, you have to make sure that you have a proven strategy that has proven to work over time. Remember, the strategy doesn't just work. You don't just judge if the strategy works or not by taking one, two, three trades, right? You have to take a larger enough sample size, right? So you have to backtest your strategy through and through. Take a 25 sample size, trade those ones, and judge yourself after that. Take another 25 trade sample size, judge yourself after that. Don't just judge yourself after taking one trade, because, like I always say, on a trade by trade basis, the outcome is always random. So there's no need for you to judge yourself after taking 2, 3, 4 trades. So you have to have a long-term mindset and keep on executing your strategy. Make sure you are rigid with following your strategy. Once your setup is presented, make sure you take a trade, because you can avoid to you can't mess it up. You can't mess up the probability. Let it do its work. Take all trade setups that meet your criteria. All right. So you don't have to reinvent the wheel. You don't have to find a completely new strategy. No, there are a lot of strategies out there on the internet. All you have to do is find what you're comfortable. Find something that you resonate with, and then you can actually learn that strategy, then trade that strategy. That's how it's supposed to be. You don't have to create something completely new from the start. You don't have to do that. Find the strategy that you like, and then learn from that mentor, and then personalize it so that it becomes your own at the end of the day. All right. So we have our MNF mastery course, for example, right? If you like the way we trade, and you like to trade exactly like you see me trading, well, that's your chance. Go in the description or check out our Telegram link in the comment section in the description. Get chatting with me so that we can hook you up with our MNF mastery course. So, but remember, a strategy alone won't make you profitable. No matter how good of the strategy you might have, the strategy alone won't make you profitable. All right, so that takes us to the second thing, which is risk management. Risk management is very important for you to last in this game. Like, really important, right? So what is risk management? So risk management involves things like, how much are you going to be risking per trade? How much risk are you going to be putting on an individual trade? How much risk exposure, how much are you willing to expose your account to in terms of percentage? So it's all about that. How much are you going to let the market actually go in your favor? How do you move your stop loss? When do you move your stop loss to break even? So all those things are supposed to be encompassed in your trading strategy, right? So it's really important. So before you execute any particular trade, ask yourself, how much am I willing to lose on this particular trade? What am I comfortable losing on this particular trade before I can say, okay, This one is actually not in my direction. So you need to know in advance before you take a particular trade. All right. So you always have to use a position size calculator for you to know exactly how much you are risking on that particular trade. Do that every day. For me, I recommend actually, if you're trading with a problem account, I recommend 0.25 to 1% maximum per trade. Okay, if you're trading your own capital, maybe you can go up to 2%, but for me, 1 to 2%, 0.25 to 2% on your personal, and 0.25 to 1% on a funded account. That is what I would recommend. And before you take that particular trade, ask yourself, am I okay taking this loss? If you are to lose on that particular trade, ask yourself, would you be okay if you lost on that particular trade? If you would, then well and good. If not, then there is a problem, because the moment the market starts to go against you, you start to panic, which is never a good thing. So accept the risk in advance, predefine the risk, internalize the risk, and tell yourself that you've actually already lost that particular trade, because the outcome of any individual trade is random. So risk management is really, really important. So ask yourself, for example, when are you supposed to move the stop loss to break even? Or are you going to move the stop loss to break even at all? Others want to just take the trade and just forget about it, whether it hits take profit or it hits TP. It's all up to you. What do you prefer? Others, once the market goes in a direction, maybe 1 2 hour, you move the stop loss to break even, or once market breaks certain levels, you can actually move it up to break even. So it's all about what you're comfortable with. They all have advantages and disadvantages. So it's all about what you're comfortable with. All right. So risk management is very crucial. Without it, you can't last in this game, because you can win 9 out of 10 trades and lose it all in that one trade because of poor risk management. All right. So it's really, really important that you understand how much you're risking, and you have to be consistent with that. Don't risk, unless you have different setups, of course. But for us, we have only one setup. Therefore, we trade with the same risk on all trades, because we understand that anything can happen. So we have to be consistent in terms of risk management. It's really, really, really important. All right. So I think that's all about risk management. And then the third one, which is the most important of these all, is trading psychology. This one is big. Some of the biggest things that actually cause a lot of people to actually fail to make it in this industry. Your trading psychology is the number one factor that's going to determine whether you are going to make it to consistently being profitable or not. So what is trading psychology? It's basically how you respond when in the market. All right, how you respond before you're taking a trade, how you respond during the trade and after. So we are supposed to be aware that 95% of traders are consistently losing money in the market. So what makes you different? What's going to differentiate you from the 95% of traders who are consistently losing money? You must do something different. Like Tom Hogarth puts it, you have to flip the switch. You literally have to flip the switch. 95% of traders are losing money because 95% of traders are doing the same thing. So if you want to be the like 5%, you have to learn what the 5% do. Alright? You have to learn that so that you don't find yourself in the 95% of traders who are consistently donating money to the market. So what are you supposed to do? For example, 95% of traders, when they enter into a particular trade, they are already thinking about how much money they can make, and then they start to think about what they're going to do with that money, right? And then what happens when that trade goes against them? They have anxiety. They tend to have emotional pain. I'm sure you've experienced it, right? Because you've lost not only a trade, but you've lost also the unrealistic expectations that you had on that particular trade, unfortunately. So it goes along with that. So all those wishes that you had about what you were thinking of buying with that money, if you made that money, all that is going to be taken away, and that's going to cause emotional pain. So unrealistic expectations are not good. So whenever you enter into a particular trade, instead of you thinking about the positive, think about the negative, right? Tell yourself, okay, I know I've taken a good trade, but I have no control over outcome. So whatever's going to happen happens, right? So I'm going to I'm going to wait for the market to prove me wrong. If I'm wrong, well and good. If I'm wrong, this is how much I'm okay losing. Therefore, I'm okay with whatever happens at the end of the day. So if you think like that, you're automatically going to differentiate yourself from the 95% of traders who are thinking about money. All right, makes sense. I hope it makes sense. And then also the number two trick that I learned from The Best Loser Wins by Tom Haggard is expect to be uncomfortable. If you want to be the 5% of traders who are consistently making money in the market, you have to expect to be uncomfortable. All right, you've heard that saying. If you want to be successful in life, you have to learn to be comfortable being uncomfortable. This goes exactly the same way in trading. For that particular, if you enter that particular trade right there, you enter the sell right there on your USD, the trade won't just go straight to your take profit unless there is some major impact news that have come up, and then that just happens, right? But that's very rare. The market just never moves in a straight line. Market, if it's going down, the market is going to make lower lows and lower highs, lower lows and lower highs, and then you have to be okay. And that's uncomfortable. You're seeing the money, your profits, your P&L fluctuating from $1,000 to 500, $1,500 to 1,000. Sometimes actually even going back to break even, or actually going back into the losses. That's going to happen. But if you don't expect to be uncomfortable, the moment that happens, guess what? You just get out, because you are not ready. You've not prepared your mind to be uncomfortable. So you have to learn those things so that you separate yourself from the 95% of traders. And then also, you have to be self-aware. You have to practice self-awareness by being aware of yourself, having emotional intelligence, right? Being able to read your emotions and the emotions of the market and emotions of others. Emotional intelligence, right? So you need to understand yourself that, okay, this is what triggers me. Immediately I have 3 losses in a row, I get triggered, right? Therefore, what am I supposed to do? I'm supposed to avoid taking 3 losses. Once I've taken 3 losses, I get out. I stop trading for the day, because that's what triggers me to do silly stuff. You have to be self-aware enough and make sure that you protect yourself. If that's what triggers you, then you have to do just that. Make sure you step out, switch off your computer, and do something else, because that's going to save you money. If you don't do that, the moment you're triggered, you have what we call the amygdala hijack. The amygdala hijack is simply when the amygdala, which is the limbic part of the brain which controls emotion, hijacks the prefrontal cortex of the one that actually controls your reasoning, plan, your thinking, basically your executive functions. So when that part of the brain is hijacked, therefore you are no longer in control. Your rational being is no longer in control, and the irrational mind has actually taken over. Therefore, you are prone to doing silly things that you are going to regret later. Things like revenge trading, over trading, over leveraging, all those things that are done when you are on tilt, when you are high on emotions. All those can be avoided by just being self-aware. How do you practice self-awareness? Well. My favorite thing to do is meditation. I like to meditate at least 15 minutes a day, especially in the morning. Before I do anything, before I start trading, I make sure I meditate at least for 15 minutes. That's going to calm me down. That's going to calm my emotions down, so that I'm ready for the market, so that whatever happens, I'm going to be okay. Things like meditation and mindfulness are going to help you calm down whenever your emotions are heightened, right? So that's how you prevent yourself. You can see from now that this is not just a quick rich scheme, a quick get quick rich scheme, right? It's not about just making money right now, but it takes a lot of work to be a consistently profitable trader. Of course, most people won't tell you that, because guess what? They're just after the money. So, but this is what it takes for you to become a consistently profitable trader. Alright, so that's how it is, guys. I hope you actually got something from this video. Remember, if you'd like to get our M&F Mastery course, the links are down in the description. If you'd like to use the broker that we use, which is Market Markets, the links are down in the description. Make sure you actually do that. And if you'd like to actually backtest your strategy to see if your strategy works, I have the right software just in the description right there. The Forex Tester 5. So make sure you check them out right there. You guys, I hope you found value. Until next time, goodbye.